Hello, a very good day to you. Welcome to Equifax Academy. Today I'll be showing you how you could do your. First of all, we're doing a top to down analysis, just how to analyze your chart. So, the first step you could do is to turn your phone from the vertical form to the horizontal form, just like this. Okay, and you can say this time frame is on a 15 minutes, so you go to the daily time frame. So upon reaching the daily time frame, you turn your chart into a line chart, just like I just did. Just you zoom out, you drag your screen, open it, will zoom out. Or if you drag your screen inward to zoom in, but not like this. Like this is okay. So excuse me. So the next step, I'll be drawing my support and resistance zones. Here we go. Click this plus sign, then as we all know, support and resistance are area where market go to and reacted. Maybe we have reversed in some certain extent or level. So I see here market go to this place and reversed, and bring the horizontal line again. Market go to this point and reversed. So on the daily time frame, the data on your chart, meaning the candlestick on your chart, is being contracted, like it's contrast. So to get a clearer picture of the market, since we are day traders, you come to the H4, come down to the H4. You can see it's now bogus, right? It's been expanded. So remember, support and resistance is not a point, it's a zone. So you draw your point you pick your point from the daily and come to your H4 and pick out your zone level rectangle. I just drag it open. So you can see all these areas are areas of value. You can see where market got to this place here. It came down a bit, but reversed back here again. You understand? So that's just it. So we draw the zone for the next one. Come on. Oh, sorry, I picked the line again instead of a rectangle. You just put it there, then you drag open. So here you go. You have your zones, your resistance and your support. Your resistance and you have your support right here. So if I'm to trade this market, you can see the market has come low, touched this point, went up, came down, touched this point again. That's the support before it went straight up to this other upper boundary that is serving as a resistance here. So if I'm to trade this market, I need to wait. Okay, let me zoom out. Sorry. Okay, I need to wait for a bearish candle to signify that the direction of the market is coming back down before I enter, then set my stop loss above this zone. Then I'll put my stop loss above somewhere here. Yes, this is a first place you could put your stop loss. That's if the market direction, meaning your price action has told you that the market is now going down by a bearish candlestick that has successfully formed. So that is one to trade with support and resistance. So, but if let's assume the market is here, the market is here. Okay, let me pull up a vertical line. Let's assume the market was here. Let me make this line thicker. Make it thicker. So let's say this line, this other past pair here, this candlestick, market hasn't come to this level yet. So the market was here, this bearish small smoke bearish candle here. So before you're supposed to enter this trade on a buy, you're supposed to wait. That's people that are very careful, though, not aggressive traders. Some traders just jump in and and expect the best. But as a well disciplined trader, you need to wait for the direction of the market to be clear first before you jump in. So you're supposed to jump in when this market just when this candle finished forming here. That's when you're supposed to enter the market. Then your stop loss will have been here. Okay, just 20 to just 20 to 15 pips below that support, and you can see it was a profitable market, ran for almost 120 pips or so. Yeah, so that's how to trade with support and resistance. Upon drawing spotting out your area of value, you go to those zones and wait for price action to display. If it's unfavorable to the potential direction, you jump in, but if it's not, you fall back and look for other profitable markets. Then moving on to how to trade with um moving average. Like I said, you take your direction from your H4. Like, okay, let's assume you are trading, you drew your support and resistance or whatsoever, or let's say you didn't even draw any support and resistance. Let me take this off. Come on. Okay, let's say you didn't draw any, you just came and you saw a bullish candlestick here. You saw this small bullish candlestick here. Okay, let me put up a line to indicate that spot. Okay, upon seeing this formation of this bullish candlestick, meaning this one, the next thing you're supposed to do, you go to your your 30 minutes time frame. Okay, what is happening? This is supposed to be in front. Okay, let me take it off. Maybe I didn't do it right. But the message here I'm trying to pass is, once you see this formation of a bullish candlestick, you come down to your 30 minutes time frame, and what, I guess this is it. Let me check it. H4, yeah, 22nd of September. You can see it here, this bullish candlestick, and you come back to 30 minutes time frame. Look at it, 22nd. You can see that was the exact time the market crossed over the 50 EMA, and that was it. So the message here is, you come down to your 30 minutes time frame, you look at for when the market, the price has closed above the 50 EMA, that is candlestick closed above the 50 EMA, you enter a buy. But if it closed below it, you enter a sell. But here is the trick involved. For you to avoid, okay, just like so something like this now, this point, to avoid something like this, that's why you need to know how to draw your support and resistance, so that you only pick trade that are fainted, trade that are at promising zones. You get, so it's not all crossover, you just jump in. That's why you go to your D1, draw your support and resistance, come to your H4, draw your zones, and wait for price to come to that zone and watch for price action to give you direction. Then come to your 30 minutes and pick your entry, and that's it. You have a very high 85% win ratio with this strategy. Trust me, you don't want to joke with it. It's very, very interesting, and with time you will see your winning rates will increase. So I really encourage you to practice this over and over again. It only gets better by repetition. So that's just it. If you have any question, please don't hesitate to hit me up with it. Thank you very much for listening. I appreciate